The mask has finally fallen. The greatest financial deception in human history has been exposed. While the mainstream media spent the last 24 hours talking about minor political skirmishes, a catastrophic admission was buried deep within the COMEX warehouse reports. As of this morning, the registered silver category, the only metal actually available for delivery, has officially hit zero. This isn't a projection, and it isn't a temporary glitch. For the first time since the creation of the modern commodities market, the exchange that sets the global price for silver has no silver left to sell. The vault is empty, the cupboards are bare. If you hold a paper contract for silver, you aren't holding an asset, you're holding a receipt for a ghost. The physical decoupling has reached its terminal stage, and the fallout is going to destroy the solvency of every major bullion bank in the Western world. But the empty vaults are only the beginning of the nightmare. We have received leaked information regarding a red alert memo circulating within the upper echelons of JP Morgan and Goldman Sachs. This memo, which the Federal Reserve is desperately trying to suppress, outlines a Phase 2 event that will involve the total suspension of all precious metals trading across the New York and London exchanges within the next 48 hours. This is the force majeure event we have been warning you about. In the next few minutes, I'm going to reveal the exact wording of this memo and show you why the Shanghai and Tokyo markets are already trading silver at a 50% premium to the New York price. But before we get to the secret suspension plans, you need to understand the crime that was committed to keep the price suppressed for so long. They have been lying to you for 50 years. The central bankers and the bullion elite created a paper casino where they sold silver that never existed to investors who never asked for delivery. They built a fractional reserve system where 1 single ounce of physical silver was used as collateral for over 500 paper ounces traded on digital screens. It was the perfect crime as long as no one asked for their metal. They used this fake supply to smash the price every time it tried to rise, robbing the American public of their purchasing power and keeping the dollar looking strong. But the gamblers have finally run out of chips. The them in this equation, the bankers, are now trapped in a short squeeze of biblical proportions, and us, the people who hold physical metal, are the ones who now hold the leverage. The catalyst for this total vault drain was the January 1st export ban enacted by the Chinese government. While Washington was distracted, Beijing effectively cut off 20% of the world's refined silver supply in a single stroke. For years, the West relied on the East to supplement their dwindling stockpiles. But as China moved toward a gold and silver-backed digital currency system, they decided to keep their strategic metals at home. This export ban created a vacuum in the London and New York vaults that was impossible to fill. Every single industrial user, from solar panel manufacturers to semiconductor firms, suddenly realized that the physical metal was vanishing. They didn't just ask for delivery, they demanded it, and the COMEX couldn't say no until the shelves were literally empty. While the COMEX screen in New York is desperately trying to project a price of $78, the reality on the ground in Shanghai and Tokyo is telling a very different story. We are seeing a violent decoupling where physical silver is clearing at $120 an ounce in the Eastern exchanges. This is a price discovery revolution. The East has realized that the Western paper price is a fraud, and they are no longer willing to sell their hard assets for depreciated US dollars. This arbitrage gap is so massive that it is sucking the remaining eligible silver out of the Western system at a rate of 5 million ounces per day. The dollar-based pricing mechanism has broken, and the real value of silver is finally being revealed in the only place that deals in physical reality. At the center of this hurricane is JP Morgan, the bank that has been the short seller of last resort for decades. Our research indicates that JP Morgan is currently trapped in a short position, exceeding 800 million ounces of silver. To put that into perspective, that is nearly the entire annual mining production of the planet. At $70, their losses were manageable. At $120, they are functionally insolvent. Every dollar that silver rises in the Eastern markets adds nearly $1 billion in losses to their balance sheet. This is why the banking apps are glitching and failing. They are trying to hide the fact that their collateral has evaporated. The silver whale is drowning, and the splash is going to take out the entire FDIC insurance fund. Silver isn't just a monetary metal, it is the most critical industrial commodity of the 21st century. Every cruise missile requires 30 pounds of silver. Every electric vehicle requires twice as much silver as a standard car. Every solar panel is essentially a silver-coated energy collector. The U.S. military-industrial complex is now in a direct war for supply with the tech industry and the green energy sector. With the COMEX vaults at zero, the U.S. government is being forced to activate the Defense Production Act to seize private silver stocks just to keep the assembly lines moving. This isn't about profit anymore, it's about national survival. If we lose the silver, we lose the ability to defend the empire, and our adversaries in the BRICS alliance know it. What happens when a commodities exchange has zero inventory but millions of people hold contracts for delivery? They declare force majeure. This is a legal clause that allows the exchange to default on its obligation to provide you with physical metal and instead settle your contract in cash. But here's the catch. They will settle your contract at the fake, suppressed paper price, not the $120 physical price. If you hold silver in a digital account or an ETF like SLV, you are about to be robbed. They will give you back your devalued dollars while they keep the metal for the government and the elites. This is the ultimate bank holiday for precious metals, and it is scheduled to happen the moment the physical-to-paper gap becomes undeniable. The clock is ticking on your ability to exit the digital grid and secure physical metal. Once the COMEX officially halts trading, the local coin shops will be hit with a wave of demand that they cannot fulfill. We are already seeing sold-out signs across the Midwest and in major cities like Dallas and Miami. The wholesalers are no longer shipping to retail dealers because they are hoarding their own stock for the coming price explosion. You have a very narrow window, perhaps less than 48 hours, to secure physical ounces at any price. After that, silver will become a black market asset, traded in secret at prices that will make $120 look like a bargain. Jerome Powell and the Federal Reserve are in a state of absolute panic. They know that if silver hits its true inflation-adjusted value, which some analysts put at over $600 an ounce, the US dollar becomes a relic of history. They are currently working with the Treasury to engineer a market cooling event, which is code for a total shutdown of the banking grid. They want to prevent you from selling your stocks and buying silver. By freezing the digital pipes, they can keep the wealth trapped inside the dollar system while it burns. This is why you must move into hard assets before the kill switch is activated. Let's look at the math that the mainstream media refuses to report. Global silver mining production is falling as ore grades decline. We produce roughly 840 million ounces a year, but demand is screaming toward 1.2 billion ounces. The 400 million ounce deficit has been filled for years by drawing down the COMEX and LBMA vaults. But you can't draw down a zero. The above-ground stockpile of silver is effectively gone. For the first time in recorded history, the world is consuming silver faster than it can dig it out of the ground. And there is no strategic silver reserve left to save us. The scarcity is real, and the price revaluation is going to be violent. While the West is running out of silver, the BRICS alliance is building a fortress. Russia has moved 5,000 tons of silver into their state fund, and China is paying its miners in gold to keep the metal at home. They are preparing for a multipolar silver standard, where the unit currency is backed by a basket of metals. By cornering the silver market, they are effectively taking control of the global energy and defense sectors. We are witnessing the most significant transfer of strategic wealth in human history. And it is happening because the West preferred to trade paper instead of reality. Silver is the only asset that works when the screens go dark. In a systemic banking freeze or a cyber attack on the financial infrastructure, your credit cards and digital bank balances become useless. Physical silver is the ultimate grid-down insurance. It is a medium of exchange that has no counterparty risk and cannot be deleted by a government hacker. The empty vaults at the COMEX are a signal that the digital grid is becoming unstable. When the institutions lose their collateral, they lose their authority. Physical silver is the only way to retain your sovereignty in a world of digital chaos. The most important factor in the coming silver boom isn't the math, it's the psychology. For years, the American public was conditioned to believe that silver was a bad investment. They were told to buy tech stocks and crypto instead. But the empty vaults have created a psychological break. People are realizing that they have been gaslit by the elites. The moment panic buying sets in among the general population, the price of silver will not go up in a straight line. It will go vertical. We are approaching the tulip mania phase, but this time the asset has actual industrial and monetary value. People often ask, why should I buy silver if my bank is insured by the FDIC? The answer is that the FDIC only insures your nominal dollars, not your purchasing power. If the bank gives you back your $20,000, but a loaf of bread costs $50 because the dollar has collapsed against silver and gold, you have still lost everything. Silver protects your value, not just your numbers. With the COMEX vaults at zero, the FDIC is now backing a system that has no hard assets to support it. It is an insurance policy on a burning building that has no water in the tanks. There are whispers in Washington about a modern-day Executive Order 6102, but this time targeting silver. The government needs the metal for its military and solar agendas. They may attempt to buy back your silver at the fake paper price to replenish their own empty vaults. This is why you must be discreet. Do not keep your metal in a bank safety deposit box, as those will be the first to be frozen during a national emergency. Keep your wealth where only you can access it. Possession is 10/10 of the law in a resource-depleted world. The solar industry is the black swan that finally broke the COMEX. Every single solar panel contains roughly 20 grams of silver. To meet the green energy targets of 2030, the solar industry would need to consume nearly 90% of the world's annual silver production. This is a mathematical impossibility. The solar manufacturers realized this months ago and began panic stockpiling, bypassing the exchanges and buying directly from the miners. This is what drained the vaults. The green revolution is being strangled by its own requirement for a metal that the bankers said was worthless. Expect one final desperate paper smash by the bullion banks. They will dump millions of fake short contracts in the middle of the night to try and trigger stop losses and scare retail investors into selling. Do not fall for it. This is their last-ditch effort to cover their positions before the total default is announced. Every time they smash the price on paper, the physical metal in the East becomes even more attractive, accelerating the vault drain. The lower they push the paper price, the faster the system dies. Hold your position. The paper smash is a signal of their weakness, not their strength. You are standing at a crossroads. On one side is the debt-based world of the central bankers, a world of empty vaults, frozen accounts, and paper lies. On the other side is the world of hard assets, a world of silver, gold, and physical reality. The COMEX hitting zero is the universe telling you that the era of debt is over. You cannot eat paper, you cannot build missiles with digital numbers, you cannot protect your family with a frozen bank app. Secure your physical position now. Move your wealth into the silver lifeboat while there is still room on board. The bear has eaten the silver, the vaults are empty, and the great reset is here. Physics always wins. Subscribe for the next emergency update.